JPMorgan and Coinbase linking up in a banking relationship, have signed a deal to directly connect customers' bank accounts to crypto wallets, basically bypassing data aggregators. So this is pretty interesting to see, like, one of the biggest retail banks and Coinbase partnering up and finally getting into the mix on having their retail customers accessing crypto and vice versa. This is pretty impressive. A big change of the guard, I guess, from where Jamie Dimon used to be talking.
What I'm thrilled about, 10 years of me belly aching about what sovereignty means, I love the fact that people are taking a hard look of how do we control the future of Canada and not have someone mess in our affairs. And I do love the direction that we're going, but boy, Matt, it's going to be painful because we're starting to peel back the onions on how vulnerable this country has been over the last 3 decades.
Welcome back to the tank, John. We've got a lot to cover here. So much going on in the world, but where do we start here? We got the Bank of Canada holding its rates amid the tariff resilience. The August deadline is looming ahead of Carney and the showdown with Trump. Maintaining interest rates at 2.75% for the third consecutive meeting. Basically, Governor of Canada is basically citing, better than expected resilience to the U.S. tariffs. They haven't really played a factor so far. But not yet. But I mean, the fact that they're holding rates right now, waiting to see what happens in this August potential deadline, how do you think this impacts future rate cuts? Because right now there's no predictions for September as well. So you think everybody is just in this wait and see mode? Because the real estate market is not in a great place. Let's be honest with you. But the rest of the economy looks okay.
Yeah, I mean, I would agree with what they're doing, largely also because, remember, the U.S. Fed, much to both of our surprise, hasn't moved anything. But I get what the U.S. Fed is saying is, dude, your impact might be increasing inflation, so I'm going to get ahead of that just in case. And you're messing with things. But if the U.S. Fed went down, I think that would impact Canada. But right now, with the 200 basis point spread between the two, I kind of see that, like, if I was in the Bank of Canada shoes right now, I'd probably be doing the exact same thing that they're doing.
Yeah, I mean, look at the tariff revenue that they're bringing into the U.S., right? It's pretty astronomical. I have to give them credit for that, but we'll have to wait and see here. I know there's a lot of people in the real estate market that are hoping that we see a cut relatively soon, or else there'll be a significant amount of pain potentially felt in the next year.
Yeah, because of the renewal.
Would you not agree?
The renewals are coming up. I guess the one question is, do you think that a decrease in interest rates would help the residential sector? I don't think so either. I think there's too much economic uncertainty. I think people's confidence is the issue. So a 25 or 50 bips point, I'm not sure it's going to do anything anyway.
Well, I think the GTA of Toronto is well supplied for the next year or so, but I think looking out, there's just not a lot of shovels in the ground. And a lot of things are going to probably dry up pretty quickly. So it depends on the timeline that you're talking about. We got to switch gears here, John. We're recording this on Thursday, July 31st, and the Figma IPO is officially live. We've got a huge story to the tech world for people who don't know much about Figma. This is a very popular design software collaboration tool that was supposed to be acquired by Adobe for $20 billion. However, instead, it was able to receive a $1 billion break free from that transaction that did not get approved by regulators, and now debuts on the New York Stock Exchange. And the shares were priced at $33, but do you know where they're trading now, John?
What is it?
Take a guess.
Double? Yeah.
Double? More like a triple. Stock has tripled all the way up to about $107 a share, up 225%. The order book was 40 times oversubscribed. And so the stock opened up at around 85 and then surged past 112 and then is now kind of trading around 107. So about a $50 billion market cap compared to the $20 billion that Adobe offered back in 2022. So
what percentage is the float on that one there?
So there was a big, I think they did 1.2 billion or so of share issuance, but a lot of it was secondary. The company did not really take any money in this IPO transaction. A lot of it was secondary.
That's about a 10% float. So these are the things you got to watch out for, right? So they have the demand. You've also created an artificial massive demand. Like I'm bullish on this company from the financial, at least short term bullish. And I'll tell you why. But those financial metrics you and I had discussed in I think on a podcast maybe about
Yep.
a month or 2 months ago. I thought this one here was going to do very well, but there's a cloud over it. And the big question in my mind is what is going to be the impact of Gen AI on Figma? And I think it's a really solid question.
I think they have a strategy for sure, and they have been showcasing a lot of their AI features recently, leading up into the IPO. But I agree with you. I think a 3x valuation jump from their IPO price is pretty significant, no matter
Yep.
how you look at the fundamentals. But I think it just questions whether or not we're back in the IPO window being wide open right now, because we're hearing a lot more players thinking about going public in the next month. The president of the New York Stock Exchange was speaking about how there's some European companies
Right.
thinking about relisting in the US because of the attractiveness of the market. You also had Microsoft and Meta report blowout earnings. I heard that the combination of Microsoft and Meta's market cap combined is bigger than the entire Japanese stock market,
Wow.
right?
Yeah. You know what this um what's it is interesting. I think where this might have an interesting impact. Uh the IPO window has been open for quite a while, except VCs were keeping themselves off of the IPO markets because they had marks that were higher than their perceived um, values that they thought that they'd get on the markets. We are now having a series of ones that are going public, and you just said 3xing, and let's just say you're 50% down from your top mark and you're going, no, I don't want to go public yet. But now you're seeing these doing these doubles and triples. It will make you really wonder. And I do wonder whether it will cause the folks to take advantage of this dislocation. There's just not that many high quality companies in the pipeline. But in the last 3 months, we've been seeing some. I think it was Circle was in here. Like
Yep.
some interesting companies popping up. I still going to be negative on our CoreWeave one, but
Look, you got
more
Circle,
on it.
CoreWeave, you've got Chime. I don't know if I think that the VCs were holding back as much as they were waiting for the demand to really line up for these types of opportunities. Because you got to remember, the last time the IPO frenzy happened, you also had a ton of SPACs soaking up a ton of the demand. So you had this sort of like demand that was there, but it was being spread across so many different IPO opportunities, where now I think it's very focused around like high growth, tech focused or AI dominated headline companies that are grabbing most of the IPO attention. And that's probably why the VCs are super excited. We recently heard Klarna is obviously thinking about doing a US listing as well. So we'll have to wait and see. But I agree, the IPO window has been open, but now it feels really open. And it feels like the US is leading the charge on attracting some of the fastest growing companies. Speaking of companies that are trying to go pretty fast and keeping up with its rivals is Canadian AI startup Cohere. Obviously securing a pretty big partnership with Bell Canada and also seeing some of its revenues kick up as well. They're in talks right now apparently to raise 3 to 500 million at a $6.3 billion valuation, up 25% from last year. And their revenue right now on an ARR basis, annualized recurring revenue, is sitting around 200 million by year end, tripling from the 70 million reported in February. And this is, I think, linked to some of these enterprise deals that they signed with like Bell Canada and RBC, and really focusing on this like privacy-centric on-prem AI model adoption, mostly in regulated industries, obviously. So what do you think here? Because obviously, Anthropic talking about $170 billion valuation round happening. OpenAI crossing, I think, $12 billion in
I think,
recurring revenue
yeah,
run
I thought it
rates.
was
I
even
mean,
higher. I thought they were even saying they're in excess of their most egregious outlier estimates.
crazy, right? So as much as this is a great sign of like sort of where they're going, they're targeting 4 to 5 billion annualized by 2029. it still feels a lot slower, obviously, than like OpenAI and Anthropic's. I think OpenAI's $54 billion valuation or revenue run rate projections are 29, and Anthropic's are 35 billion for
Yeah.
2027.
I mean, it still doesn't change my view in that, that there's going to be call it the rule of three on the mainstream uses of LLMs. It's going to commoditize. I do like that Cohere is trying to find where should they play and where could they effectively compete. One of the great advantages they're going to have from a Canadian perspective is there is no one else in Canada, and given the uh, the issues around sovereignty, having sovereignty over an LLM or infrastructure from an AI perspective, etc., is a very positive thing. So one of the things that they are doing very, very right is getting all of Canada to support them. I think is a great path. The question will be, does that translate across borders in other sovereign nations? And I think there's still a challenge. One of the other countries was doing the same thing was, remember, Mistral. When was the last time you and I have talked about Mistral? And that was the European sweetheart. And I haven't heard anything about them. And like, geez, it must be certainly a year. It might even be 2 years. And again, that's giant sucking sound of the big three right now. And even Facebook backing off somewhat on their llama is just kind of showing how tough it is to compete in this space.
Yeah, I think I agree. I think they're playing a different game and they're playing their own strategy, trying to be that sort of like secure on-prem, regulated industry focused
Mhm.
player. Maybe the prize is not as big in the near term, but could be
Yeah,
in the long term. And so it just may take them a bit longer to get there. And your question of like, well, does the valuation entry price here justify or represent the near term or long term future, and how long is that future? So it is something that I'm sure investors are questioning, but it seems like the right play for them, given how far ahead the other providers are who are playing a way
they're
different
playing a
game
different
than
game.
they
Yeah.
are. Yeah. Switching gears, John, we got JPMorgan, Jamie Dimon, the famous anti crypto headlines coming out. JPMorgan and Coinbase linking up in a banking relationship have signed a deal to directly connect customers' bank accounts to crypto wallets, basically bypassing data aggregators. So this is pretty interesting to see, like, one of the biggest retail banks and Coinbase partnering up and finally getting into the mix on having their retail customers accessing crypto and vice versa. This is pretty impressive. A big change of the guard, I guess, from where Jamie Dimon used to be talking. How do you think this plays out across the rest of the banking sector? And I got to ask you, will the Canadian banks ever allow something like this to happen?
So here's my bold prediction. Yes, they will. They're looking, and you got a company like Simple, that their growth was really ridden off the back of crypto, and they must have been smiling that the banks didn't want to do this. But when you start to see the quantum of the deposits and the float that's sitting in here, but the United States made that huge move last week with the Genius Act, and now that float, and whether it's stable coins, is now considered as a tokenized deposit. And Jamie Dimon went from bear to bull almost overnight. Remember, he called crypto a fraudulent scheme or words to that effect not that long ago. And then under the Genius Act, when they tokenize it as a deposit, what that means is that you could lend against it and make money off of it. Now, so all of a sudden now, these the crypto where you don't have to even pay a return, at least today, on them, or whether it's a stable coin, you could make money lending. I got to believe that the Canadian banking system is not going to sit still, and they're not going to watch their deposit base slowly fritter away so that the U.S. banking system takes complete advantage of it.
I agree completely with you, John. I think the deposit base is the most valuable asset that the
The
Canadian banks have
heartbeat. It's
going for them.
everything. It's not something.
It's
It's
everything
everything.
their entire model is based off of. And if it bleeds itself out into a much cheaper, more open, transparent, and free flowing form of asset moving, in a Wealthsimple account, then watch out. I mean, that's a leaky bucket that you do not want
Watch
to have.
out, and let's just say that the alarm bells are out right now, and it's an opaque escape of deposits out of the Canadian system. So when the banks are busy competing against one another to grab your deposits, because like you just said, it is the heartbeat of a bank, but the deposits cross the border in essence, and they don't come back. It is a slow, leaky balloon, and what happens when the banking system becomes unstable on that? We lose our sovereignty if you run the end game, and if this all happens as predicted, and it's not a straightforward thing. Does Canada lose the sovereignty of its central monetary authority because we can't control the leakage? You can't control interest rate policy. This is a very serious issue. And I think Canada has to move very, very quickly. And crypto can no longer be considered a security for this purposes. And we're going to have to look at the regulatory side to make this uh, a financial asset just like any other currency.
Are you hearing anything about a Genius like act being developed in Canada? I have not.
Let's just say I am helping in the distribution of the thesis.
Good. At least somebody is talking about it. Moving on here, John, I want to make sure we cover this because I thought it was a pretty ridiculous type of story to even have talked about, but it's the Ontario government's axing of the Starlink deal. Did you see the numbers around this $92 million contract that finally ended with Elon Musk? Starlink that was going to power 15,000 remote homes, including a bunch of First Nations, basically off the back of these US tariff retaliations. And Premier Doug Ford, who vowed to scrap it over, Musk and his Trump ties, confirmed the cancellation, but withheld the confidential killer fee. And I guess right now they're partnering with Explore after a competitive bidding process. And I think there's a lot of transparency questions that people are asking right now on how these deals kind of came
Right.
to be, which is part of a broader $4 billion broadband plan that was set to roll out in June. But obviously, given the Starlink disruptions, we'll see how that plays out. But how do you think about sort of like political intervention in providing access to basically a fundamental utility for its constituents should be
Well,
considered?
okay, so let's carve those two apart. So let's talk about um, the communications and the sovereignty around communications. The issue was, and frankly, I've been a big thorn, both federally and provincially, saying that you cannot have communications infrastructure controlled by non Canadians. And again, I keep on mentioning the folks read the US Cloud Act that gives the US the power. The orange hair guy in the White House has this power to tell US based companies to access data without notifying the foreign company or the foreign party. And remember when I sounded out the alarm bell when I saw a speech by Brad Smith of Microsoft in the EU. It was written in a detailed article 2 months later saying, "Holy shit! This U.S. Cloud Act is." Microsoft was the first party to admit that the U.S. has the authority, just like China does, to access our communications and data infrastructure. So the right answer, and by the way, or shut it down, just like Musk did that when the threat during the whole Russian Ukraine and then he backed off. So
Yep.
to me, and this is what I was talking to the various governments, is you should have never done this all in the first place, right? And Quebec has now declared the same thing. You know what's really puzzling to me? Rogers has gone out to publicize their satellite service, which has been there already. Who is providing the service? Starlink. So there you go. So now that the government has realized this is a fundamental risk to Canada, we now have corporates here who are saying, oh, I don't really give a shit. I'm going to make as much money as I can. So do you believe this? It's a fundamental risk. I do. I do the same thing with AI data centers, etc. This is a new age in Canada where we need to look at the criticality of would you have a foreign based company controlling your water supply? And you'd go, no, of course not. I don't even want that in private hands because I'd be concerned. Exactly. And what I'm thrilled about 10 years of me belly aching about what sovereignty means, I love the fact that people are taking a hard look of how do we control the future of Canada and not have someone mess in our affairs. And I do love the direction that we're going, but boy, Matt, it's going to be painful because we're starting to peel back the onions on how vulnerable this country has been over the last 3 decades.
It's a good conversation that we should have been having a long
Correct.
time ago. So I agree with you. I think the fact is, though, like if we can't actually build the technology to offer these services, what do? Wait and see? Fund somebody who's going to take 10 years to catch up to
Yeah,
Starlink? Like there's a kind of wait and see
right.
approach that you can only wait so
Yeah, no,
long,
no,
though,
no, no,
right?
no question. But let me ask you a question: is that what have we done in the past? What did we do with CoreWeave? We using our taxpayer money to continually build up a competitor so that the distance gets further and further. Well, how smart is that? There's one analogy that I always love to use, and I forget which Asian country it is, but I think it's Japan or it could be Vietnam, that they uh, grow their own rice still, knowing that if they
Yeah.
import it, the cost of domestically producing it is 3x the cost of importing, and they do it for one reason only. We do not want our people to starve to death if they get into a war or a dispute. That is sovereignty, folks. So think about the things that matter to us. And
Well, think about what happened in natural gas during the Ukraine
right,
Russia war
right.
and
So
and
it's
how
those
Europe and
things.
Germany had to import
The
it.
criticality of the things. If it's about, making bubble gum or something, I agree with you. Well, then you kinda go, "Hey,
Agreed.
you know what?
Yeah.
Do we really need the bubble gum?" Or maybe some people might say yes. But if we don't, let those go, import those if you need to, and just diversify your imports. But I think the time of, you know, if it's wine, for example, maybe it's time for you to say, well, maybe that BC or Ontario wine is not so bad after all. And we have to focus in
Yep.
on import substitution. These are the great questions we should be asking on everything that we consume.
Okay. Switching gears, the last thing I want to cover with you, John, is this trend that we're seeing in more companies preventing AI web crawlers from scraping
Yeah.
their websites. Recent study of just this year, month, July 2025, numerous companies, publishers, and platforms are actively blocking or restricting AI web crawlers such as GPT bot from OpenAI, Claude bot from Anthropic, and others from accessing their websites. You got the New York Times, Condé Nast, Time, Atlantic, Fortune, Associated Press, and the list goes on. But recently, there's a lot of other headlines being made around Amazon is now blocking rival AI shopping agents from Google, Perplexity, Anthropic's Claude, which is weird because they're a big investor in Anthropic, OpenAI's chatbots from basically preventing direct product links in AI searches and automated buys. This protects its $56 billion ad business, but it does risk a lot of visibility, I guess, because this is where a lot of the searches are happening now. So how do you think about this disrupting the kind of traditional shopping funnels? Obviously you've got Shopify. We saw recently other players, trying to do this as
Mhm.
well. Walmart is, currently staying open, but there's different paths that people are taking in terms of allowing people to crawl their websites and seeing if it trickles back to them in terms of revenue or not. So how do you think these, blockades should be viewed when it comes to benefiting, obviously, the business versus, slashing AI ad revenue? Which path do you think will end up working out in the end?
Well, this is the age old battle of a closed versus open system, right? So it's the same thing like Amazon and Shopify became the anti Amazon, right? Like I am a general proponent of open systems. And then you invite in the ecosystem to be dependent upon you, but layering on so that you become indispensable. Amazon right now has the absolute power to maintain a closed system, just like Apple does, in their own ecosystem. But it is interesting is that I think, Amazon, first of all, they're way, way behind from an AI perspective, so they're vulnerable. And number two, what happens to their ad revenue and their eyeballs that are stuck inside the garden? But this happened 3 decades ago. I used to always remember where there was these technologies where people were going into their website, and if you clicked a button and you went into, something you wanted to buy on a website, people were developing technologies to make sure that you never escaped out of that website so that when you were completing your transaction, you then closed it and you were back where you were on that original website. Otherwise, what ends up happening is these are like portals. You go in through that portal and then you're gone. And Amazon's trying to figure out, how do I keep everyone on there? That's number one. Number two, what I do find interesting about this discussion is kind of our original discussion about copyright, et cetera, and what the LLM should have access to. And it is interesting to watch people starting to say, hey, not only do I want to protect my walled garden, but even if you don't have a walled garden, why should I give you the right to access if I can't make any money off of that? So I think the small people may have no choice, because if the eyeballs are inside of the LLMs, then how is a small business owner, selling their stuff online going to get access to eyeballs unless they're in a Shopify or unless they're in an Amazon?
It's interesting though, because people are blocking it for different
Right,
reasons, right? Some people are blocking it for the content side, right? Like the Condé
right.
Nast's of the world, the New York Times. But then there's the ad revenue piece, which is a huge part of their revenue and bottom line. It's amazing margins, right? That's one other piece of it. And then the other piece is sticking them on the platform, like the eyeballs piece of
Yep,
it for actually other purposes of generating, traffic or transactions. So I don't really know which path will end up working, but I think it's already gone that way of where open source is the way
yep,
people want to be able to purchase, and with more agentic solutions that don't even actually show you the website they're pulling information from is what people are more used to, right? You've got UTM, right? You got UTM links that kind of track where everybody goes on the internet. And you can see them whenever you click a link, it's Amazon.com. But if you found it through Google, like the image or the item, it will have a UTM tracking link inside of it, right? On where you came or originated from. So that's not new software. But I think like the problem around this situation is that it's what the consumers
yeah.
want. It's not what
You know
Amazon
what's
wants.
interesting? I haven't gone through this, and I'm sure there's way, way better experts. But what is the future of ad networks then? I don't know.
It's going to
I
be a
don't know.
problem. I definitely think there's going to be a problem around this. I mean, we just saw Spotify's chief ad officer get canned and thrown under the bus for missing the quarter on their numbers. So I think it's going to be an interesting time for a lot of people in the ad space, but we'll have to wait and see until next time, John. Thanks for jumping in the tank.